path to higher GDP growth. Editor, Business Television, Vivek Law, with this exclusive.
You've met with a fair amount of success in terms of inflation. You've done a lot for the rupee from the time you came. Of course, we've seen some slide, and I'll come to that in just a bit. But by and large, you've been able to create a stable rupee. Do you believe that the rest of the environment now needs to pick up and do a lot more? And what would that be? What would you expect the environment to do, whether it's the government, whether it's the private sector? What would you expect them to do?
No, I think that as we deal with some of the legacy problems of the past, which have built up over time, growth will pick up. I think it's in the process of already picking up. But more work needs to be done. I mean, we're not finished. We need to unclog some of the projects that have got stuck. There's a responsibility there for the government, for the promoter, for the banking sector. Lots of people have to play a part there so that we can put these real assets, which are valuable for the country, back on track. A lot more needs to be done there.
Are you disappointed with the pace of growth on these measures that you talked about?
I mean, you can't work more than 24 hours a day. I think there is a lot of work going on. We have to work within a particular system. It's a good system. I mean, it's good that we're democratic. It's good that we're a vibrant democracy. It's good there are checks and balances. But within the system, we have to move forward, and that has a certain pace. The other thing that's important is, as we become a more developed economy, we need to build institutions. And that takes both time as well as realistic expectations. That, you know, we can't go continue along the seat of the pants policy making that we used to in the past. There has to be a little more sort of direction, substance, framework. So, for example, you know, as we move towards focusing on inflation, you know, we're trying to put out our forecast. We're trying to say what we're going to do given our forecast. But there's always this constant debate. Oh, you know, you should junk your forecasts and focus on energizing growth because growth is very weak. Yes, growth is very weak, but we also have an inflation mandate that we have to respect, and we're trying to do the best in doing as much as we can for growth given the inflation mandate.
What spooked the markets and a lot of the commentary that has come out you know, in the media today, Dr. Rajan, after your policy yesterday, was about the forecast. The market, as I said, I started by saying it wanted a rate cut, you gave it to them. The forecast didn't look very pleasant, and I think the bottom message that they were trying to take away from what you said was there are going to be no further rate cuts this year. Is that a correct way of reading what you said?
No, I think that's incorrect, and I think what we said precisely was, given what we believe is our best estimate of the future, we are just going to be able to meet our inflation goals by the end of the year. But there are lots of uncertainties. We pointed to three big uncertainties. One is the monsoon, its strength, but more important, the administrative reaction to potential weak monsoons. And it can make a world of difference if you have a weak monsoon, if you have the appropriate policy reaction. And so that is something we have to wait and see. I mean, we have included some estimates of what we believe a reasonable estimate. But if action is very vigorous, or if the monsoon is much stronger than currently forecast, that will obviously create more policy room for us to act. And similarly, oil prices are a big factor. They've come up quite sharply. We do think there's an upper bound on those oil prices. If they go back down because there is a sense that there is excess supply in the market, which was the first reason it went down, it would potentially give us more policy room. And similarly with the external environment. So what we said was, given our best estimate, there are these risks. We've moved a little, you know, forward by saying that we're going to cut rates despite these risks. But let me outline these risks to you and say, based on how these risks evolve, we will, you know, we will take a view. So it wasn't shutting the door.
So to say that it's a shut door is not correct.
It's not a shut door. It's a contingent statement.